The Federal Reserve is reportedly eyeing XRP as it looks to revamp the country's next generation of payments. Is this move indicative of a larger trend where central banks worldwide are warming up to RippleNet's technology? Let's find out. In this video, we are going to explain why the Federal Reserve is reportedly looking into XRP and what this means for the future of XRP and Ripple. So first off, let's go over why the Federal Reserve is looking at XRP. The Federal Reserve recently released a discussion paper exploring central bank digital currencies, also known as CBDCs. One of the use cases the Fed highlighted in its report was wholesale payments. This refers to large sums of money moved between banks and other financial institutions. As you may know, Ripple's main use case right now is for cross-border payments. But one of the things that makes XRP special is that it can be used for domestic payments as well. The Fed noted that a CBDC could improve the efficiency of wholesale payments, and that this could lead to lower costs for financial institutions. It also suggested that a CBDC could help reduce the risk of settlement failure, which means that banks could move large amounts of money around with less risk of something going wrong. This is especially important when moving money internationally. Now let's talk about XRP. The Fed didn't mention XRP by name in its report, but it did discuss the potential for private sector innovations to improve the efficiency of wholesale payments. One of the innovations the Fed highlighted was distributed ledger technology, or DLT, which is the technical term for blockchain. The Fed noted that DLT could help improve the speed, security, and transparency of wholesale payments. And we all know that XRP uses a decentralized ledger called the XRP ledger. So while the Fed didn't specifically mention XRP in its report, the fact that it highlighted DLT as a potential game changer for wholesale payments is a good sign for XRP holders. After all, Ripple is one of the most established and widely used DLT payment systems in the world. However, the question remains, is this enough for central banks to start embracing Ripple's technology? Well, only time will tell. But there are some other developments that suggest that central banks are at least open to the idea. For example, the Bank of International Settlements, which is an organization that represents the world's central banks, recently published a report on CBDCs. The report noted that DLT could help central banks improve the efficiency and effectiveness of their monetary policy operations. In addition, the report noted that DLT could help central banks better manage liquidity risk, which is the risk that a financial institution will not have enough cash on hand to meet its obligations. Again, this is another area where RippleNet's technology could be of great benefit, since XRP can be used to quickly and cheaply move large sums of money around the world. However, the big question is whether central banks will actually be willing to embrace Ripple's technology. After all, Ripple is a private company, and some central banks may be hesitant to partner with a private entity. However, the benefits of doing so could be too great to pass up. In April, the fact that Ripple had partnered with a company called Fireblocks is a provider of a digital asset, custody, and infrastructure platform for financial institutions. Essentially, they provide banking services for crypto. The big deal here is that Fireblocks has partnered with a lot of major banks around the world, including Bank of America, HSBC, and Standard Chartered. So if central banks are looking for a way to dip their toes into the crypto and blockchain waters, it would make sense for them to work with a company like Ripple, who already has established partnerships with major players in the traditional finance space. So do you think that central banks are ready to embrace Ripple's technology? Let us know your thoughts in the comments below. As we end this video, we want to remind you that the content is for educational purposes only and should not be considered investment advice. We're not financial advisors. Now go out, make some money, and be good little nodes.